The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White. Once again, into the breach, dear friends. As we start off today, we've got the S&P cash. I'm showing off 5. Let me update that. I thought it was different. Maybe it just bounced. You blink and you miss it. Man, we're off 5 points at 1998 with 1.7 billion shares. So starting pretty much with about 300 million more shares that we had from Tuesday to Friday. Maybe even 400 billion more shares on the New York Stock Exchange consolidated tape. That's the Amex. That's all shares that are listed on the NYSE but traded elsewhere, also on ECNs. So kind of the true big board volume opposed to the NASDAQ with 1.12 billion shares so far. Of course, the NASDAQ looking a little bit healthier than the rest of the market, up 7.5 points, and we'll get into why. Anyway, what else do we have going on today? It is the first day back from vacation for many on Wall Street. In fact, most maybe were just starting to show up to work maybe an hour ago. So don't be surprised if we see a little bit of back and forth. We also have a early expiration this month, because of yesterday being a vacation. Normally it is on Wednesday. What they will do normally is if you have a day off, it'll start on Tuesday afternoon. That's where we're probably going to be starting today. Look for a little bit more accelerated options, market makers going delta neutral. And not uncommon to see the kind of action that we have now, which is kind of pushing it down in the morning. A lot of times the people at in the Hamptons, the Wall Street Titans, will be hanging around and talking to people and out there. And what they will do is they'll call up and they'll want to sell a few things coming back from the weekend. Mostly what they're selling today is any kind of commodities and anything priced in the dollar. Dollar index is up yet another almost 21 cents at $82.99. That is probably what's moving most things out here. We have gold off almost $22 at $12.65.60. We've got silver off almost 30 cents at $19.20. Platinum's off $13. We also have crude, the West Texas contract, off almost $2.90. There was a huge risk premium going into the weekend. Not much happened, and a lot of that premium's coming out with the double whammy of a stronger dollar, mostly because of the way Europe is handling their problems. They're basically going to devalue their currency and make their exports look a little bit better to the world, try to get something going over there. But as we look at it, just keep a close eye on that dollar index, because that's probably the most important thing out here today as we come back. But not uncommon. I suspect we're going to see probably a little pushback up coming in to tomorrow and Wednesday. And that's going to give us a good indication of where Wall Street thinks that we're going to expire a week from this coming Friday. And the other big things happening out here are, of course, we found out kind of late on Friday that it looked like Alibaba was going to, they were going to try to push it out the door. Along with Alibaba, we now have Uber and Lyft and a great deal more of these IPOs looking like they're going to try to push themselves out the door before the window closes and the market pulls back. A lot of pretty worried people. But a lot of discussion on Wall Street this morning, and how could I say, hankering about what you're going to sell to raise cash to buy Alibaba, to buy Uber, to buy Lyft, to buy Dropbox, to buy any of these kind of things going on. And we have a request. You can always email me, by the way, at path@tfnn.com. You can post a message in the den, or you can always give me a ring at 877-927-6648. In fact, thanks, because I'm just going to remind me. We are going to get into Apple in just a second, but I digress. On this day in 1998 was one of the biggest days in Wall Street. What happened was, we've talked about it with Andy Heck, since he worked with some of these morons before, that basically believed that if they just keep betting bigger and bigger, the market would eventually come back to them. But on this day in 1998, Wall Street top investment banks, encouraged by the Federal Reserve, complete a marathon negotiation session for $3.65 billion in a bailout of a giant hedge fund, long-term capital management, which nearly lost about $2 billion in a single month when the mathematical models designed by two Nobel laureates failed. Greenspan basically engineered this, and I suspect a great deal of the moral hazard that we saw in 2008 came to pass because of that. A lot of people thought that they would backstop anything, that they let Lehman go was supposed to be a warning. But he tells Congress that the global economy crisis triggered by Russia's loan default is likely to intensify. Basically, August 17th of that year, Russia had hugely devalued their currency, and it made the bonds absolutely stink. And, of course, guess who had a huge amount of those bonds from Russia? Yes, dear friends, it was long-term capital management and the smartest people in the room. But all of this is good news. And, of course, it led to, what was that, like November? I'm going to have to look it up. Maybe I can find it during the break. The November thing, we were down almost 300 points on the Dow in the morning, and Greenspan came out, or was it Paulson? Can't remember who it was. Came out about 1 o'clock in the afternoon, and you ended up about 250 points up. That would be like being down 500 or 600 points today and ending 500 or 600 points up. But the whole Russian problem started to steamroll, and it became a huge problem. Was it October or November? Maybe someone will know in the den. I can't remember the date, but that was it. Anyway, of course, what we did learn at here is all the mathematical models, and it was kind of interesting because I was going to do a bunch of stuff and go sailing this weekend, and the weather turned out fairly horrible, and other things arose. And so I sat home and watched some of the best lectures by probably one of the smartest men other than Einstein of the 20th century. That was Dr. Feynman. He was a big wheel in figuring out exactly how much uranium was needed to go bang in the big bomb. He went to work for Caltech, and probably most of the physicists we have today are a result of about 7 really good lectures that he gave. But he was pretty good at a lot of different things. But one of the things that he did warn everybody about was the fascination with models that everybody has. And one of my big problems that I have with the people that are in the climate change crowd, they make a lot of predictions. None of them are coming true. And it pretty much is the same fallacy that happened with long-term capital management. So me knowing exactly how these models were made, or at least a good outline of how the models were made for long-term capital management, basically have one huge problem, and I wanted to bring that up just because it was on this day. It's called kurtosis risk. It's a risk in statistics and decision theory where the risk that results when a statistical model assumes normal distribution but applies to observations that do not cluster as much near the average, but rather have more of a tendency to populate the extremes, either far above or far below. Of course, everybody's familiar with the bell curve. They get that in high school or even junior high in the United States. But the problem is, what happens when you get down to the bottom of that bell curve and it turns right back up on you? Well, that's pretty much the way markets move, and it's called kurtosis risk or fat tails. The fat tail metaphor explicitly describes a situation to have more observations at either extreme than the tails of normal distribution would suggest. Therefore, the tails are fatter. One of the reasons why is, of course, once you've got somebody against the ropes, like long-term capital management, and or how about that nice little outfit up in Chicago that went boom just a couple of years ago with a former governor running it. If you know somebody's against the rope, Wall Street will take you to the mat and make it 10 times worse. We've seen that this year again with HLF, Herbalife. Once everybody knew somebody had the big short position on it, the real issues didn't matter anymore as much as sticking it to the guy that was on the wrong side of the trade. Now, he's been able to turn that around and make it a little better this year, so it didn't end up eating it all. But more than often, somebody on the wrong side of a trade is not going to get the easy way out. And that's what a lot of people knew about long-term capital management, and they were more than willing to drive it down even further and then buy on the pennies. One of those guys that was buying on the pennies was William Buffett. He made a great deal of money off of long-term capital management by making sure that he made a deal, and before he said, this deal is good for an hour. And then, of course, there was no way that anybody could get the board together and vote on it. And, of course, it was gone. But he was able to say, hey, I tried. He wasn't interested in trying. He was waiting for the thing to blow up. He had lots of cash sitting on the side. But a lot of people, and I talk about this quite a lot, because probably the fog of the markets, looking at them and understanding why they go much farther than anybody ever thought that they could or would. And, of course, one of the best quotes ever out there is markets can remain irrational longer than you can remain solvent, by Mr. Keynes out here, who thought he knew economics and ended up throwing all his money down a rat hole in the stock market many years ago, but kind of the father and modern economics to some extent, but since he really didn't test it with real cash, most of the economic part of it didn't work. But just a good time to think about that. I've talked about the books before: Paving Wall Street, Inventing Money. There's 4 or 5 of them all on long-term capital management, because it's almost a biblical story. When we come back, we'll talk about Apple and some of the rest of them.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new chart. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And, you are back. Oh, we were talking about kurtosis risk. Just wanted to really bring this up again because it's one of the problems that models have. And I was talking to somebody this weekend about their models and why they were so far off for what they think the temperature, the rise in temperature of the Earth is. And I said, well, part of the problems are you don't have more than about 130 years worth of history of real temperatures. You can infer a great deal by tree rings and everything else, but of course all you need to goof up tree rings is a couple of good volcanoes going off and it'll look like things were bad. It's easy ways to avoid it. The best way is to, of course, get data and make a model that works, and at least you get at least a few predictions that are right. Over 20 years so far, their models have failed. And it failed pretty much they do fail pretty much for the same reason that long-term capital management's models fail, and that is almost always, especially in the stock market, but almost always statistics are good for about 75% of the time. They go into what Nassim Taleb, who wrote The Black Swan and Fooled by Randomness, calls the fourth quadrant. And that's why we have 100-year floods about every 30 years. Of course, they just don't fit into those actuarial tables. Same thing that we have with hurricanes hitting. They hit a lot more, but if you open a company, you'd never be able to sell insurance to the people that actually need it. So you go back from the last 20 or 30 years worth of data, and of course it looks like you should only have one every 100 years. But of course 30 years on average, you should probably have a couple hundred years worth of data behind it. And of course, since you could never run a company that way and you could never make a profit, everybody just rolls the dice, and eventually a hurricane comes and all the insurance companies are wiped out and they act surprised. I'm shocked. There's gambling in Casablanca. I'm shocked. So anyway, it is rather interesting. But just think about this, especially when we get people with models out here throwing around S&P 3000 now, and $500 for Tesla, getting a lot of those morons that probably should be beaten with a shovel on CNBC this day. And just remember it. Normally you get it. Of course, Apple had a big weekend. They started letting everybody know that they were going to have mobile payments. I talked about it on this show on Friday. I actually wrote that I thought it was a big problem since the leak didn't include anything about a deal with American Express, MasterCard, and Visa. I had to retract myself this morning because, of course, as soon as the huge problems with Apple's being hacked on their iCloud came out, they started pushing this out this morning to make sure that their stock was higher and people would just ignore the whole issue with being hacked. In fact, interestingly enough, the guy that runs Business Insider that used to be talking about Amazon.com in 2000 going in the next year to 1,000 was out yelling and screaming over the weekend and trying to rally Apple. I think he knows that a great deal of his readers on Wall Street and the people he needs to look good to, it was important for him. Yeah, blodge it, baby. And it was kind of interesting. So anyway, soon after we find out that it's been hacked and naked photos of just about everybody in Hollywood are flying all over the internet, it becomes somewhat problematic. And within hours, they had these leaks, quote leaks. I'm sure someone got on the phone and said, hey, there's no way we can allow this kind of bad news to sit out here without coming out. So they kind of hinted about the NFC last week. So the leaks really came hot and heavy Sunday through last night about how they had already inked deals with American Express, MasterCard, and Visa. On Friday, I said there may be a good short on American Express, MasterCard, and Visa, maybe anyway, because of the market, but mostly because if Apple was going their own way, certainly looks like something could be disrupted. But a deal with those guys also is problematic because my question is, how big a cut is Apple going to get? And once they got one company to sign, maybe they made a good deal with one company and forced the other two to pay up. Who knows? But we'll get to the rest of it and the implications of Apple getting hacked when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And, of course, we were talking about Apple and maybe the ramifications about them being hacked. If it was, or when it was, Microsoft that was hacked, when it was everybody else being hacked, the press couldn't stand it long enough. But certainly, if Apple was born up under a lucky star, it certainly was that the press is some pretty much sycophants when it comes to anything Apple, and didn't spend a lot of time on Apple and why the things weren't secure. So for the most part, Apple kind of gets a free pass when it would be anybody else. They go after them a lot harder. But the gentleman that I guess led the hacking basically said that it was a team approach, and it looks like while some of the accounts were encrypted, the people gave up the encryption through a variety of means. Mostly they left it on their phone, and people hacked their phone, got the encryption keys for their accounts, and were able to get it. So kind of like having a safe and putting a piece of masking tape and writing down the combination on the top, probably not a good thing. And that's kind of the equivalent of what these people did, is they most of them either did it or they coughed up their keys to somebody that called them who said who they were from Apple. So there was the hackers used the Find My iPhone app. I imagine they used quite a different amount of things because my understanding, at least from the guy that said that he was responsible or claimed responsibility, said there were about 7 people that worked on getting all the information from all these different people. So not just one thing, but a great deal of many things were used out there to figure out how to hack these accounts. And then, of course, people stupid enough to put anything on the cloud that they don't want somebody else to see. We know for one thing, and that is unless you're encrypting it, and unless you keep that encryption key password private, that nothing will be out there. And certainly if a government wants to get it, they will just eventually crack it. So, like I said, if you don't want anybody seeing it, certainly don't do it. And if you're going to do it, don't take pictures of it and then expect something to come out. Almost biblical, your sins will find you out. My grandmother was big on telling me that quite a lot, and it is true. But I digress. But Apple, of course, responding positively to this. It's up 50 cents. I think it was up $1 and 20 cents earlier. But we're basically waiting and on hold for the last couple of days before the 9th when they roll all this stuff out. But Apple's kind of shooting a lot of bullets out here early, trying to keep both the stock market and investors happy into the release, and I'm wondering if this isn't setting up a little bit of disappointment and maybe sell on the news come the 9th. It's getting tough out there. Anyway, that's pretty much what we have to do on that, and I think maybe we have a caller, and we'll get to that. I wanted to start talking about cons, but we'll do that as soon as we get back with John from Boston. How you doing, John?
Way too good. How about you?
If I was any better, I would only be excellent.
Excellent. Hey, buddy, if you have time, IGTE, I have a couple of stocks I wanted you to take a look at. One of them is IGTE and SPWR, and I saw them both in the Gartley scans. Mm-hmm. So I just wanted to get somebody's opinion that actually knows what they're doing. Okay.
And when we look at this, are you talking about the one at 3208 for the X point?
Yes, sir.
Okay. Well, you basically had it. You had a bounce out here. This is not uncommon for the way a Gartley pattern may set up. You'd probably want to have your stop below that X point, right?
Yes, sir.
3208, and this is pretty much what you have up here. At this point, though, you want this thing to go through the C point, which had 210,000 shares. Of course, today, was it Control? Oh, no. Program options. Chart appearance. Bar data. There we go. I don't know why. I must have clicked something wrong. To see what the high of day is, 3864. So you still got a little bit to go before you prove on the C point. You certainly are light volume today, though. You would have liked to seen 200,000, at least 210,000 shares going in to that C point today. So you're long this now?
I'm thinking about getting into it. No, sir. I was thinking about scaling into it. The only problem is the volume is pretty light here, like you say. But
yeah.
It has that high volume bar there up at 42, so I was thinking maybe it may go back and retest that.
Well, you would have had to go down here and buy the D point, which would have been about 21 cents higher than the D target. But when you got back in there with light volume, almost the 7.8, you probably would have seen that day. You would have had to probably buy it that day or the next day if you liked it here. Not a bad-looking chart. Energy on that C to D leg was light, and now we're coming up. But you need volume in the next 2 days to break the C point. But there's only one safe point to buy this thing at, and that's pretty far in the rear-view mirror right now.
Okay.
If you got back to 33.81, that would pretty much destroy the pattern of the Gartley because you're going out too many days on the right-hand side. Maybe you could buy this thing again if it went down there with light volume, but the risk-reward here is pretty horrible. I mean, you only got 50 cents or something to where it's actually going to test that C point. So what I liked about this one was mostly just that very light volume on the C to D. My mouse is acting up here. Sorry, folks. But if you can look in this back at the Gartley, the X to A point had a 1.4 compared to the C to D with a 0.8 for my power law vector indicator number, just showing how light the energy was coming back to that D point. So normally I like a little bit more of a retrace too. This thing retraced the A to B with the C point. Just, what was that? Just 38%. So normally I want to see a 50% retrace in this thing, but that was pretty light. And of course, you didn't have but a couple of days out here, but even the C to D was didn't have a great deal of time either. So, you could see that anything at that D, around that D point, which you actually had down to, 34.48. I mean, you pierced it that day, so you could have bought it back on the 15th too, that light volume penetration to that level.
Yes, sir.
If you would have bought it, but the risk-reward's pretty poor here. And the other one is SPWR.
Yes, sir.
Okay, hang on a second here. I guess I need to spell SPWR. Actually do it correctly. SunPower. Now, this one was perfect. But you buy the D points on these. What do you think? Did you buy the D point on this one?
I didn't miss that one. No, sir, I did not.
Okay. Well, yeah, I mean, when these things get around in this case, the D target was $33.21. That's where you would have been looking at. This went to 85% of the X to A leg, and if you were thinking about buying it, not bad. This thing made a problem, though. I probably wouldn't have bought it because of the heavy volume down on the August the 1st.
Yes, sir.
Yeah, 5, well, I guess, actually, that's lower volume, isn't it? That's not a bad-looking one. I forgot I looked at this one and missed this. The B point was 7.3 million shares. It blew through it with 5.4 million shares. So you broke the B point with lighter volume. You went to the D point. You would have bought a buyer at the 33.21 and had your stop at $30.80. So, I don't know what else you could say. That was, so what were you thinking about on this? Buying it now too?
Kind of the same deal. It has a kind of a high volume high up around 42, but the volume's so light right here. But I just want to get your opinion of it. And, buddy, I so appreciate your time so very much.
Okay. Now, I just wouldn't, if you're playing these Gartley patterns, you got to buy the D point. You're not buying anything up here. The risk reward up here is horrible.
Okay, buddy. All the best to you.
You bet.
Take care.
Okay, thanks, John from Boston. But no, pretty good looking. Both of these, especially power law vector indicator number, looking pretty good for SunPower. Not a bad looking Gartley pattern out here. And this one working pretty good. You need 1.4 million shares when it goes through the July 22nd high, 39.75. So we're about $1 underneath it. But you're doing about 1 million shares today. So you're going to need some juice to get through the C point. And most likely you probably take your money on the C point, I don't know, 80% of the time anyway. Volume will get up there and the thing will go sideways with the overhang. Unless you get a real move out here. But this thing looks like if it's going to break the C point, it's probably going to jump over it one day. And you'll have to look at the volume to see whether or not you want to take it. So anyway, I had a few things I wanted to talk about. I wanted to talk about Con. We had been shorted in the daily newsletter a couple of times. And let's get back to it here. Get this thing cleaned up. We were short this thing kind of in the maybe, yeah. This one, yeah. We were short this through a couple of times, and this is one of the hardest stocks to trade out here because now the super high short interest on this thing. Where would we short this thing? I can't remember now. Anyway, we shorted it twice. I thought we shorted it at $50, covered it at 42 once, and then shorted it 48.5, and I think covered it at $50.50 when it broke back through the move back up. But I don't know where that's at. I'll have to go back and look at my records. But this thing is pretty much finding support from that huge earnings disappointment from February 20th that had 25 million shares. We've gone and blown through that this morning with 11 million shares. So maybe this thing's trying to find a bottom out here. But what this can tell you is two things. One, they are kind of in the electronics business. They're kind of more like an errands, rents, and that kind of stuff. They do a lot of in-house financing, and a lot of people did not pay them. So that's showing that we are going to have more stress in this market. And one of the stocks you should be watching very closely, especially because they focus on the downed-in side of the market for electronics and refrigerators and that kind of stuff. But more kind of half Best Buy, half Aaron's Rents. But certainly a very downbeat earnings numbers out here today. But again, this you had that high volume low. You know it was going to get tested. You can make a claim that it did get tested by the March 14th low out here. And, of course, you came back and tried to fill most of the gap, as most of the time these did. But on April 22nd, 4.3 million shares. Go to a little higher high out here on June 2nd with 2.8 million shares. And you get 3 drives to a top on July 3rd. So if you want to see how these things work, certainly you can see that the bounces are getting with lighter and lighter energy, and certainly the highs coming in back into these highs pretty much. But I wanted to short this thing again, but the last time I looked, it was 20 or 25% short interest. And since I'd been stopped out of it the time before, I know how easy it is for these guys to run some of these stocks. But that was one of the ones I wanted to look at. We also have some nabobs of moronism. Those nabobs are out here talking up Tesla with ridiculous valuations. Of course, it's ludicrous already. So maybe just a little bit farther, not a big deal. But 25% short interest. What is this analyst doing today? I can't prove it. I can't rip out his brain and actually see it. But my guess is that there was some kind of conversation, probably in a bathroom where it couldn't be recorded. And that went something like this. There's 25% short interest in Tesla. We need you to come out with some ludicrous valuation because we want to run all the shorts this morning and at the same time sell off a lot of our shares to those nabobs that are short this stock up at the highs. And looking at Tesla out here, you got about 8 million shares, but awful close to what I've been talking about. That is, that you're going to get this kind of spike with short covering, and you're going to have to look very close at whether or not you could short Tesla out here. I'm thinking that maybe you got about another 7 to 10 days, but we'll talk about more about shorting Tesla when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And when we come back, we're going to hit a couple of them, a couple of things that people picked up. Checking my email, Tesla short. How did I know? And IBM. We're going to try to get to all of these as quick as we can. Anyway, Tesla, I suspect what we want to do is wait at least 3 days on Tesla. My guess is they're going to hold this thing up until at least the shorts have to cover if they're on margin. We want to look at the options probably after the close tomorrow to see what they tell us. If a lot of people were buying puts on it, my guess is that they'll hold this thing up into expiration, and maybe next Wednesday, a week from tomorrow, would be a better time to start looking at shorting Tesla. What we need to do is the shorts to vacate and not have such a cushion of people to be natural buyers on this, but I think it's probably going to be enough to get a lot of people running out the door on this. You needed 24 million shares, so it's certainly going to break through on a lighter volume today. And but you know, this thing's going to be in distribution for a while. I think the crazy valuation calls and the short squeeze out here is probably meant to run all the way through expiration, and then you want to look at it. But it pretty much hit where I was thinking, which is my target was around 285. This thing may just go sideways all the way through expiration. But let's look at the options after tomorrow's close, and I'll try to write a note down here, or maybe you can email me on Thursday, and we can see what the option market makers are betting on. But my guess is right now, when we look at them, the difference from today to tomorrow will show that these guys are looking for a sideways action into expiration, and then the stock will break after expiration, which is kind of what I think the entire market is set up like right now. IBM International Business Machines, another question on shorting it. My guess is that this thing's going to hit 186.40 through expiration. Again, we need to look and see what the option market makers do tomorrow. But my guess is they're going to run this up to 195 for expiration. This market's going to go kind of sideways. And if we're going to see a big break, it's going to be after the 19th of this month. I think that there's going to be a great deal of pushing. And yes, are these things ripe? But we're also in expiration week, and I don't think they're going to let anybody off easy. There's going to be a lot of wild talk. Some of these stocks are going to be sold to buy things like Alibaba, Uber, and the rest of these huge amounts of stock that's going to come available to suck all the oxygen out of the room. But my guess is it's not going to be these big Dow leaders. They need these things to hold the indexes up and keep the fish in the boat. And we had another question about BAC. I think we could see a nice little pop. One of the questions was on the Gartley. Could we see 17.25 out of the Bank of America? And I think we can. I mean, it broke the C point out here with volume. You needed 70 million shares. You got 89 million shares. So you have broken it with higher volume. Could you see 17.50 to expiration? 17.25, $17? I think you could. So I'm going to say keep your powder dry. Keep your finger off the mouse button. Give this market a couple of days. Like I said, most of the people that run Wall Street didn't come back till probably 1 o'clock, or might not even be back till tomorrow morning. Those guys are going to probably talk about what stocks they want to sell to raise cash for this flood of huge IPOs coming out the door. Didn't have time to get to everything out here, but I hope we answered Wayne's and Rob's questions and some of the people in the den. We'll see you tomorrow, same bat channel, same bat time.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.